Hi everyone. Today we will talk about middle class spending squeeze, which has wider ramification for our economy, stock market, and also the social condition prevailing in our country. Recently, I read an article published by Bloomberg titled US economy tethers as middle class pulls back spending. I felt that in India also, we are probably facing a similar challenge, which needs further elaboration and understanding from our point of view. As an investor, I have never ignored trends of any kind in the United States for relating with the realities in my own country. Therefore, this video attempts to connect trends in the US consumer behavior and economic inequality with similar signs prevailing in India. The US economy may still be growing, but that growth is being driven by wealthy, while the middle class is pulling back. The Bloomberg article highlights a troubling divide. People are still shopping, but it is mostly those who can afford luxury, and the rest, they are cutting back on essential consumption. Interestingly, today richest 10% households are fueling nearly half of US spendings. This has been mentioned by companies like Chipotle and Hilton during their earning calls. As per Moody's Analytics, today top 20% are spending two-thirds and the rest 80% one-third. An economist said that I feel very uncomfortable and the economy feels like the top-heavy Jenga tower. The stock market has bolstered the wealth of the wealthy, and any market fall will unsettle the spending trend affecting the economy badly. From the dollar stores to Walmart, middle class income Americans are stretching every dollar. Spending has shifted sharply, and retail data is reflecting a story of caution, not confidence. Despite GDP growth, financial stress is rising due to housing credit, wage stagnation, and stalled hirings and layoffs. Wealthy are getting wealthier due to stock market gains and the rising real estate values also, and are spending on pricey products and indulgence. The middle class and the lower income group are shifting their spending habits, using more coupons, buying cheaper brands, and eating less often outside. The anticipated risk is that if this trend persists, the economy will be subjected to more duress, leading to discontentment, social unrest, which may be more corrosive for the growth. Drawing parallels for our own country, can we assume that it is similar in emerging Indian economy as well? If we read RBI Consumer Confidence Survey of May 2025, which mentions urban middle class sentiments declining, FMCG volumes growth remained flat while luxury brands post record profits. Credit card outstandings are rising, yet discretionary spending is down in middle income households. Way back in December 24, Reuters had mentioned that India's urban consumers are cutting back on everything from fast food to discretionary goods as food inflation and weak wage growth are biting in their pockets. Urban consumption has hit a two-year low, raising concerns about structural nature of India's consumption-led growth. This echoes the US middle class retreat from consumption, which allows us to draw a parallel between US and Indian middle class stress. While Times of India, in its article till very recently in November 2024, stated that major Indian consumer companies, including Hindustan Unilever and Reliance Retail, have flagged a weaker urban demand for middle class spending, which is under strain due to high inflation, slower wage growth, and job opportunities, echoing consumption stress affecting big brands just like in the United States. Be it America or India, we are seeing a tale of two economies, one floating on high end consumption, the other fighting to stay afloat. This is not just about inflation, it is about inequality, access, and economic fragility that's hidden behind GDP figures, such as in the US, middle class consumption pullback is quite visible. In India, similar patterns emerging in urban middle segment. This has direct impact on GDP growth, consumer companies' growth, and share prices and overall investment sentiments. India's middle class tax cut in the 25-26 budget, lower tax rate for the middle income earners, aiming to leave more money in their hands, boosting the housing consumption, savings, and investment, as per Reuters. The recent GST structuring is also a trigger for stimulating spending by the middle class and lower income segment. These moves are designed to stimulate domestic demand when urban middle class consumption is already under strain. Indian city dwellers are cutting spending on fast food and discretionary items due to inflation. The deeper question is whether the middle class anchor of growth is weakening in both these economies. What do you think? Please write your views in the comment section and like and share the video. Let us now explore some of the possible remedies which are relevant for both the economies. There are some few of them are already being implemented, but we have to closely monitor the pace and the depth that these initiatives sink into the middle and lower classes for whom consumption expansion is of utmost importance. First is lowering income or consumption taxes so middle income households have more spending power. India has structured income tax and GST recently, but the consumption spark is yet to be seen. Secondly, strengthening job security, raising the minimum wages, and expanding formal sector jobs to lift household incomes. Thirdly, managing food, housing, healthcare cost inflation so that the middle class incomes do not erode. Recently in India, GST has been removed from healthcare insurances, which is a very welcome move. Fourthly, targeted social consumption stimulus such as vouchers, subsidies, or direct transfers that support middle class spending and investment. The amount of per capita stimulus has to increase to meet basic sustenance income due to higher cost of housing and education, as well as groceries, as I have mentioned earlier. But we must also think how to productively finance these subsidized doses, which must not be used for political gains, but for short term stimulus to ignite spending and growth in the economy. Lastly, encouraging saving, credit taxes, debt management tools so households are resilient and confident to consume. The post tax returns on our saving is very low, and more transparency, education, and investors' protections must be ensured while encouraging investment in risky instruments such as equity and mutual funds. Are the policy makers listening, or are they distracted by only numbers? This video invites you to look past the headlines and ask the right questions about who is thriving and who is just surviving. Thank you very much.